Hello, friends, and welcome to the show, Your Real Estate Today. Paul Jameson, your host here with the Jameson family of real estate companies. That's Jameson Realty, Jameson Property Management, Jameson Property Investments. I'm here with Pollen, as you can tell in my voice, and Sandy Dickinson with Cross Country Mortgage coming up also. Calvin Armstrong with Norwood Armstrong Stokes is going to be joining us today. We've got an absolutely full show today. Do you know it's full? It's going to be. Just like my sinuses, it's going to be great. So, Sandy, how you doing?
I'm doing good.
Good. All right. We're just stuffed up with things to say. All right. So, and don't be telling me I sound like Porky Pig, Booge. That is not going to work. So, period.
Okay, I'm not saying it.
That's all, folks. All right, we'll saw that later. All right, so what did I learn this week? Oh, so many things this week. Here's the headline. Making your plan now is prudent. If you want to sell, it is time to make a plan. And you need to look at options. At Jameson, we understand that. So we developed an actual variable service plan that we have now rolled out to our selling clients. And it really answers what's going on in today's market. And so we're pretty excited about it. We've got things in that plan that no other firms can offer. I think last week, Sandy, you and I talked about if you're putting your home on the market, if you're out there advertising, that you still need to do all the work if you want the top dollar. Wasn't that right? Or am I thinking?
No,
crazy?
that's correct.
Yeah.
That's correct.
Yeah. You got to get the paint right. You got to get the cleaning right. You can't leave your toothbrush on the counter. Your bed's unmade. You know, the black walls in your teenagers' bedrooms. You still need to prepare the house. TJ's laughing because probably when he was a teenager, he had those black walls. Yeah. Do you have a black light too, TJ, in there? Yeah, a little bit of hippie posters with the, yeah, I'm saying. Okay, yeah, he's such a good guy. Anyway, even if he did have that back then, he's changed. He's changed. He's rocking the 80s now. He's got this stash going on. That's pretty robust, man. I'm liking that. I'm liking that whistle catcher right there, man. That's pretty good.
Thank you.
So the thing about it is that, as we talked about last week, if you want top dollar, you got to have that home ready, staged, set up, ready to go. Had one this past weekend. You all may have heard it advertised over on Halstead. We had 50 to 60 people come to the open house due to the marketing and multiple offers, and my clients are happy. They did the work. You still got to do the work. So you got to have a plan, though, because, you know, things are dynamic, I think, and Sandy can speak more to that. Rates are, you know, pretty much double what they were in January, still by my standards, and most very, very low, very reasonable right now to buy a home still. But we've been sensitized by these lower rates. So do the work, have a plan, be ready, and be ready to look forward to what the next house or the next option is going to be. If you want to sit back and figure out what you want to do next, have an Airbnb on hold, ready to go. Have a rental on hold, ready to go. Some people have gone on extended cruises. I mean, hey, whatever floats your boat there. But have a plan on what you want to do and where you want to go. It's a great time to sell. The market is not going to decline by all indications. There's just the supply and demand, as you all have heard me talk about many times. Even though those rates are up, the supply is so low that to get to a balanced market, you're just a ways away. But here's the other side. With the cost of money where it is right now, for some, they still can't afford to buy now, or they don't have the proper savings to even compete in the sale of the homes right now to put up the right amount of cash. So what I say is this, excuse me. I say that what you do is you realize that those people, if they're not ready to buy and they're working on a plan to do that with their realtor, that they got to rent. So if you're an investor and you're thinking investing in real estate is a helpless chore right now, you are absolutely mistaken. And you're missing a great opportunity, not only to buy rental property that's appreciating, but also rental rates are going up and all those people that aren't buying are going to rent. And last year, rents went up at least 19% in many parts of the country and around us. And it makes those returns very appealing. So think about the opportunity. I've had 2 clients of Sandy's and mine that have done cash out refis, and they're using that cash back out to buy more rental property because they see the opportunity and the growth in rents, because this shortage of inventory isn't going away anytime soon. It's just not. But here's the thing. First time since June of 2019, inventory has gone up. However, that increase in inventory rounded still came out to be 0. It's a mouse fart of an improvement, but it's still something, right? All right, Sandy, what's the update?
Well, we're talking a lot about the same thing. So housing starts were up 4% this last month. I'm sorry, year over year, which does mean more supply. But our demand is, I'm hearing so many numbers, anywhere from 1 million. Freddie Mac says 3.8 million. I've heard 5 million. We have a lack of supply. So we may have at least 1 million short. I don't know the real number, but that's going to take us, I don't know, 4 or 5 or 6 years to balance out. You know, even with the higher housing formation and more stuff going on the market. Rates are bouncing around a lot like a bouncy ball. They're up about 2.375 over the last few months. Economists are and Jerome Powell are saying that they are going to keep raising the Fed rate, maybe 50 bips in June, but he's kind of waffling now on how much he's going to do that. And we kind of need him to do that to settle down this inflation. So we've got a lot going on. Loan applications are down about 11%, purchases about 12%. But it's, you know, the whole point is that rental rates are going up. You know, Paul said 16%, I'm showing 14%. So buying a house is still a great value because you're going to have a steady payment. And rates are not that bad. They're anywhere between 5 and 6, depending on the day. And we still have the nice ARM rates if you want something a little lower.
So what's the superpower for you, Sandy?
Superpower is that a couple things. We have our own appraisal panel, so our appraisals come in really nice, and we have a ton of products. So we can fit the product to your need, depending on if you need a lower payment or a lower down payment or interest only. We just have tons of great products.
And if somebody wants to do a loan, how do they get you?
They call my mobile at 704-577-0144.
704-577-0144. Sandy Dickinson, Cross Country Mortgage. Thank you, Sandy.
You're welcome.
Coming up soon, Calvin Armstrong with Norwood Armstrong and Stokes. Myself, Paul Jameson. More of Your Real Estate Today here on News Talk 1110 99.3 WBT. Stay right there. Welcome back to the show, Your Real Estate Today. Happy Saturday afternoon. It's Paul Jameson, your host. Glad you're with us. I'm the owner of Jameson Realty, Jameson Property Management, Jameson Property Investments. Thank you for spending Saturday with us talking about real estate. I'm here with Calvin Armstrong with Norwood Armstrong and Stokes. And how you doing, Calvin? Great to have you back.
Doing good, Paul. Glad to be back. Glad to be on the show. Yeah,
it's good to be with you. All right. So one of the things I wanted to make sure we talked about, Calvin, today, as we talked about our whole kind of the industry, and then I want to talk about different things around what you all do. You know, just kind of as an overall, what's the top issue facing you guys these days?
so I mean, there's three things that we've been seeing a lot of here lately. And number one, given the current market conditions, we're seeing a lot of seller leasebacks on the closings that we're handling. And you know, it's great. It's a great bargaining tool for the buyer to allow them to get the property under contract and make it convenient for the sellers. But one thing that we have to watch out for with our clients is if they're purchasing the property as a primary residence and they're financing it through a lender, one of the requirements of that loan, or standard requirement of that loan, is that they move in to that property as their primary residence within the first 60 days. So that's something that we're trying to keep an eye on to make sure that our clients are aware of that 60-day requirement. So not only will the seller be out within that window, but our buyers will be able to move in as well.
Yeah. Are you finding, or are the lenders going out in like a unmarked car?
See, that's the big question mark there. We don't know how they do it, but we know we sign a document that says they can. But I know from my personal experience, I've never seen that unmarked car out in front of my house.
Yeah. Well, you know, I do have a feeling that they are, you know, tracking expenses, you know, and things,
Right.
you know, they could be seeing if utilities are in the correct name, or, you know, whatever the case may be. There's ways to find out, I guess, without the unmarked car.
Right. That's exactly right. And, you know, the insurance companies, they follow up as well to see, to determine that the house is occupied and whatnot. So that's another way that the lender could be tipped off, is if the insurance policy was canceled because they're not occupying the property.
Is there anything else?
The next thing, you know, that it's kind of an ongoing issue in the industry, Paul, is the wire fraud and cybersecurity. We're continually working to address that and try to stay out in front of these fraudsters. We're getting attempted hits almost daily now, so it's more and more prevalent. So we're just really trying to hammer home to our clients, our agents, that this is going on, that it's serious, that we need to be taking precautions when giving out our banking information and sending wires, and it's not going away.
Yeah. Unfortunately, there's a lot of people doing that. I think I shared when we did a show about this, either you and I did or Trez and I did, that we had somebody steal our banking information and print up checks.
Yep.
And
we had the same thing last week. It was up in Washington, D.C. Someone had printed some of our checks, and you know, we had a safe a precaution in place. It's called positive pay that stopped those funds from ever leaving our bank account.
Yep.
And well, our bank account is our trust account, so it protects our clients' money that we're entrusted with. So that's why we have all these different safety measures in place.
Right. We have the same enactment now on all our accounts. So we approve every single clearing of every single check.
Yep.
And it takes a lot. It's a pain, but you know, it's a part of what we got to do, you know?
Exactly right. Exactly right.
That's right.
And then the third thing that, you know, we've been seeing a lot of lately is as these older properties are being renovated and flipped, we've been seeing a lot more issues with surveys. So we've always recommended to our clients that they get a new survey done on the property when they're buying it. But here lately, with these older properties that haven't been sold in a while, we're seeing more and more issues. And they're a lot easier for the buyer to work through on the front side before they actually own the property and become liable for those issues. So we're reinforcing that need for new surveys on properties.
Are you seeing a particular trend of certain issues that are more prevalent?
The one, it's a small sample size, but over the last couple of weeks, I've had a few come up with driveway encroachments where they think the driveway's on their property, but there's one that a week ago that 5 foot of the driveway was on the neighbor's property. So that was a big one. And then the other one that we've seen for a long time is fence encroachments. People put up a fence, and typically it's a small encroachment where the fencing company got off a few inches here or there. But with these older properties, with the older fences that have been there for years, we've been seeing large fence encroachments. The last one I had was 13 feet over the property line. So they're substantial, and they need to be addressed prior to closing. Otherwise, post closing, the buyer's responsible for that. They could pay to have it removed, or the neighbors could physically remove it from their property for them.
Yeah. I mean, I had that issue. I shared many shows ago where I had a fence that, and at the time it was put in, it was agreed upon. Everybody was fine with it. But the neighbor when they found out I was going to sell, since we were selling, they didn't want to deal with it with the next neighbor.
Yep.
So they're like, you got to take that fence out. It was a split rail fence. So what I did was I went out with a chainsaw and cut off the bottom of every single post.
Yep.
And hauled it off and took it away.
Yep. And that's we see it all the time. And the thing to do on the seller side there is, if they have a good relationship with that neighbor, we can put agreements in place that allow that fence as it is to stay in place, but no new fences to be installed. So if it's ever removed, it has to be corrected, but we can put an agreement on the record that allows that, in your example, that split rail could stay there. And once it's, needs to be torn down, then it would have to be corrected at that point.
Right. And, the biggest concern I think people have in allowing those encroachments is they're afraid that that person will all of a sudden claim rights to that property that formerly belonged to them. And that they'll lose that property. Like the guy that had one that was 13 feet, you said, something like that. I mean, that's a big chunk of somebody's yard.
Right. And that's, that's the great thing about these agreements, is it documents that both parties are aware that the fence doesn't follow the property line, and that it's on the fence is actually located on their neighbor's property line. So there's an acknowledgement that they do not own the land, that they're just allowing that person to keep their fence there out of kindness, really.
And they can ask to have it removed at any time, right?
Exactly.
Yeah, that's kind of the good thing, I think, at that point. So that's a great idea. Well, Calvin, as we move forward in the show today, one of the things I want to talk about is I sat in with a closing Monday with Trez, and I've sat in many with you also, and you come out with this giant stack of paper. And inside that paper is a lot of different things, but there's some key things that are in there that I typically see you and Trez call out. Hey, look at this.
Yep. Yep, exactly right.
And we're going to talk about a few of those things to make sure you look at them, because they have a definite purpose in the loan package. So I'm with Calvin Armstrong with Norwood Armstrong and Stokes. I'm Paul Jameson with Jameson Realty, Jameson Property Management, of course, Jameson Property Investments. We're spending Saturday talking about real estate, having a good time, window down, cruising. Here we go. More from the show Your Real Estate Today and more from us coming as soon as we get back. So don't go anywhere on News Talk 1110 993 WBT. Hello and welcome back. We're spending Saturday talking about real estate. Paul Jameson here with the Jameson Real Estate Companies. That's Realty, Property Management, Property Investments. Here with Calvin Armstrong from Norwood Armstrong and Stokes, our real estate legal team that helps us and partners with us and does, I don't know, a good chunk of realtors closings throughout the Carolinas. So glad they're with us today. We're talking about the loan package. But before we do that, let me give you some interesting facts. There's a factoid. Commercial property. 52% of survey respondents say they intend to reduce their office space over the next 3 years, mostly to eliminate excess space they anticipate to be freed up by remote workers. That is up 44% from last year. So 73% of companies surveyed by CBRE said they will continue to support hybrid work arrangements. So it proves my analogy, Calvin, and that is people don't always need a place to work, but they always need a place to live.
That's true.
So that's the real key to looking at investments and looking at investments in real estate. What type of commercial space are you buying? Because in these larger office complexes, that inventory is going to get larger and larger because remote work has become a new part of the corporate environment, right? They did some studies that showed that people were actually more productive in many cases working from home. What do you think of that, TJ? You think you'd be more productive working from home? Yeah.
At least equally.
Yeah, or at least equally. Yeah. My problem is it's hard to show property working from home.
That's true.
That's a little bit of a challenge. Yeah, so it kind of messes up your chi a little bit, I think. But I think that's a viable part of what we should look at. So anyhow, all right. So Calvin, when I sign that lender package, that big stack of tree papers that you have from the lender that we got to sign, there are some parts that we really need to pay attention to. Can you share some of those?
Absolutely, Paul. So one thing you've probably noticed when we do our closings, I try to stack them in the order. The important ones up front, because I know clients' attention to detail and listening skills are going to fade a little bit throughout the closing. So these are going to go right in the order that I go through my packages. So the first one is the closing disclosure. This one it lays out the whole buyer side of the transaction on one document. So it's got their loan terms, it's got the cost associated with the transaction, their insurance, any HOA related items. It really lays out the entire deal on about 5 pages. So this one is the one that I go over first. And really, if the clients are comfortable with this one, it shows me that they have a good understanding of what we're going to go throughout the rest of the package. So I think it's a great idea for them to both review this one prior to coming to closing, and then also allow me to go over it with them so that I can answer any questions that they have or fill in some details. And I always tell them there's no silly question. Ask them now, because if you don't know the answers at closing, you'll never know. So that's the first document that I like to cover with clients. The next is the note. That's the loan document itself. So this is the one that's going to bind them. It's going to set the terms out of the loan. You know, this is your loan amount, your interest rate. This is when your payments are going to be due, as far as which day in the month, and then also lays out when that first payment's due. So that's very important. That way they know expectations as they move forward post-closing, you know, both with all the obligations and costs associated with moving, it tells them exactly when they need to be ready to make that first payment with their lender.
Yeah.
The
And where
next
to send
one, the next one that is, it's kind of the get serious moment of the closing, and that's the deed of trust. That's the one that securitizes the loan for the lender. So at that point, they're granting or using the house as collateral to secure the loan, and it allows the lender to foreclose on the property if they go into default. And I want clients to be clearly aware that if they're not making their payments, if they're not complying with the terms of the loan, the lender does have the power to foreclose on the property. And most people are completely aware of that, but I also just want them to realize exactly what they're signing, and also answer any questions regarding that as early in the closing as possible.
Yeah. There's an expression that says, you don't pay, you don't stay.
Amen. That's it right there.
Yeah.
And then, like we referenced in the last segment, the big thing that we're seeing here lately is the lease back on the seller side. So I've really started to go over more clearly the certificate of occupancy. And that, depending on the type of the loan, whether it's investment property, primary residence, second home, it tells what the lender's requirements are of the borrower. And so here lately, it's become important with the primary residence purchase, because they're expected to move in within the next 60 days. And I want them to be clear on that, because if they're doing, a month lease back, it takes it down to 30 days they have to get out of their apartment or wherever they're at and get into that house once the seller vacates the property. So we really try to drive that one home as well.
Yeah. That makes perfect sense. Have you ever seen any of the packages where they've gotten the name or the legal description wrong?
Yeah, that happens quite often. In a lot of transactions, there's one spouse that's on there as the borrower. So they're just pulling their credit to get them approved for the loan. And then they're adding the other spouse onto the title and making them a co-owner of the property. And that's when we most often see names misspelled. So it's a good idea to make sure the borrower is communicating with their lender to provide them the correct spelling of a spouse or significant other's name, so that we're not trying to make all those changes last minute at closing when the dog's sitting out in the car ready to move into the new house.
Yeah, that's right. I have had a loan closing where the rate was wrong.
Really? I have not seen that one personally.
Yep. It was one of my personal ones. It wasn't with Sandy. It was well before I knew Sandy. It was a lender that I used to use.
And that illustrates it right there, Paul. That's, sometimes people just want to sign and get in, get out. But it's a large financial transaction for our clients. So we want to work through things with them in detail and take, up to an hour or so to explain it, to go through every document, make sure it all matches up. It's what they expected. And then they're comfortable going forward.
Yeah, that amortization schedule, though, that sucker's kind of hard to look at.
It can be a little daunting, I was talking about it in the closing just yesterday. With when you hear, it's a 30-year loan, these 30 years don't seem that bad. But for some reason, when you see that year on the paper, 30 years out, it seems like a whole different ballgame.
Yeah. And look at the amount of interest that you've paid over that 30 years. That's a big number. Whew.
Yeah, it's getting scary. And you've seen in closings, there's some tricks to that to help clients cut down on that interest that they're paying down over time. And we really try to focus on that, especially with the first time home buyers, explaining them just paying a little bit extra early on. Here's how you do it. Can really save you a lot of money over time.
Yeah. One extra payment a year can really change. It cuts it down by, what is it, like 8 years or something, or 7 years? It's a big number.
That's the figure I've been told.
Yeah, that's great. All right. And then just in there too, there is a statement, we didn't really talk about this too, but there's also a privacy or solicitation statement in there too that says what your rights are related to them with your data, right? With your information, right?
Right. There's a document that lays out exactly what the lender is allowed to do with this information, what they're not allowed to do with it. It explains why they collect certain information.
Mhm.
One thing that kind of catches clients' eyes is it says they're collecting personal information to help fight money laundering and terrorism. And that seems weird when you're buying a house. But
Yeah.
at the end of the day, they're just sourcing the money, trying to figure out where it's coming from, and make sure it's from a legitimate source.
Is it good to have the lender there, you think?
Absolutely. There's a lot of questions I can't answer. But on the loan side, there's certain questions I don't know the answer to. If there was a negotiation with a rate buy down or a change in rate, things like that, it's great to have the lender there so that they can ask questions. Or another common question we have is, will this lender be who I make my payment to?
Yeah.
We all know a lot of loans are sold to other servicers, but not all of them are. But that's a question too that the loan officer can typically answer for the client and say, hey, we usually sell our loans to XYZ. You can expect a payment from our bill from them come July. And that way the client knows what to do.
That sounds good. Well, we're going to talk more about loans, your home, and what's going on in real estate with Calvin Armstrong, myself, Paul Jameson, the show Your Real Estate Today on News Talk 1110 99.3 WBT. Stay right there. Rocking back to the real estate. Paul Jameson, host of Your Real Estate Today, here on Saturday afternoon with you, here with Calvin Armstrong with Norwood Armstrong and Stokes, talking about your loan, talking about the loan process, and talking about your home. We're glad to be with you and glad to be spending time with you. We have time. We're going to talk about some of the benefits of owning land. We'll see how we go there. If not, we'll get to that in another show. But we're talking about the loan. We're talking about the stuff that comes up in the paperwork and why it's important. It's good to have your realtor there with you if you're signing a lot of this paperwork, isn't it, Cal?
Absolutely, Paul. The realtors, they're the ones out in the trenches negotiating this deal. And they know it better than anybody else. Maybe them and the paralegal know it, just as well as each other. But I love having the agent there because if there's any question marks about an invoice or how is this negotiated, they're there to answer those questions. And then also, one unfortunate part about this process is we don't meet the clients until the very end. We may have a phone conversation, but we don't get a chance to meet them in person until we're at the closing table. So it's nice to have the agent there. There's a calming presence that the agents bring for their clients because they've been working together here for weeks, months, whatever it may be, and it allows the client to calm down, to ask their questions, to not clam up, and get a true understanding of what the documents state that are being presented to them.
Right. That's exactly right. So what happens to all that paperwork after we sign it?
Well, there's a portion of it. We have to pull a couple of the documents from the package that we have to record with the county. That completes the transaction legally in North Carolina. And then we keep a digital copy of all those documents in our office. We store those internally on our server. And then we're providing a digital copy typically to the clients. And then the originals, they're all going back to the lender. The lender takes them back, and those are overnighted typically the same day of closing.
Yeah, that's awesome. That's right. So one of the things that people ask me all the time in the closing is, hey, the bank is collecting title insurance that I'm paying for. Why is there another little bill for me to have title insurance on owner policy?
Yeah. So in North Carolina, lenders require that there be lender's title insurance if they're giving a loan on the transaction, and that's in place to protect that loan for the lender. So if there's a defect in title, something that's going to cause the secure transaction to be defective, title company is going to step in that example to protect the lender. Lenders in North Carolina do not require owner's title insurance. I wish they did, but they don't. on all of our transactions, we're automatically putting owner's title insurance in place for the client. And like you were saying, it's just a small additional fee that the title insurance company adds on there that provides the same protections to the client. So it protects their investment in the property. And there's different types of policies we can purchase for them. But it's usually a nominal fee, and it's providing, it's protecting the transaction as long as the property, as long as the client owns it.
That's right. That's right. So what happens if we sign everything, Calvin, and there's something wrong with what we signed?
So post closing, if we missed a signature, things like that, lenders are going to be reaching out to us. We'll be coordinating with the client to get it corrected. If it's post closing, clients living in the house, we're a little more flexible. But also the day of closing, on a lot of loans, we have to get what's called funding approval. So we have to submit documents to the lender. They look them over and say, yep, you're good to go, or no, you're not, you're missing this. And those examples, we're reaching out to the client and getting them back in as quickly as possible so that we can get it recorded and finalize that same day so that they can get the keys to their new house.
Yeah, absolutely. Absolutely. The paralegal, and our superpowers, Renda, of course. And I know they're a critical part of the transaction. What's the most critical part that they manage for you?
They're really, Paul, they're once it's under contract, they're managing the transaction.
Yeah, that's right.
They're communicating with the agents, the buyers, the sellers, the lenders, surveyors if they're involved. They're communicating with the title company. They're communicating with us, the attorneys. So really, they're the point in the transaction where all the information is pulled together. Yep. And they're collecting it and they're sharing it with the other parties involved. And they're really looking ahead to try to locate any potential problems that we may run into down the road and correct them as quickly as possible so that we're closing on time. So they, in my opinion, once it's under contract, the paralegal becomes the most important person involved in the transaction as far as getting it closed.
They're the person in the front of the band with the big hat on, marching everybody down the field.
Absolutely. That's a perfect
whatever they
analogy.
call that person. Yeah. And they're not throwing the baton. They're the other one that holds the stick and makes it go up and down. What is that person called?
Drum major?
Drum major? Yeah. Whatever it is. They're setting the beat, whatever the case may be. All right. Title searches. How far back do they go and what are they looking for?
So in North Carolina, on every transaction, we're required to do a 30-year title search, a minimum of 30 years with a 10-year judgment check. So we're going back 30 years unless we can tag to a prior title policy that can shorten our search. But for sake of conversation, we're looking at least 30 years, and we're looking at who owns the property. Are there any mortgages out there that need to be paid off by the sellers as part of the closing?
Yep.
Have the taxes been paid on the property? Are there any HOA rules on the property that the client needs to be aware of that they're going to comply with?
Yeah.
And then also, are there any judgments against the property where the seller is sued by a credit card company or have other outstanding debt that we need to collect so that the buyer does not become obligated or have an issue with these problems down the road?
Yeah, we had one where the hospital on a medical bill had attached their deed. They had no idea that they did that.
Yep. Yeah, we see that all the time. And it's easy to work through on the front side, but getting these things addressed post-closing can be a real nightmare.
I bet. I mean, that's for sure. And then lastly, over the next minute and a half or so, there are different types of deeds. Could you just kind of give a high level of the primary?
Yeah. So there's three types that we see a lot in our day-to-day practice. And the first is a general warranty deed. This is what we use on 99% of our real estate transactions. And that one says they're conveying the property. So they're giving the property from the sellers to the buyers. They're saying, I own the property and I warrant that it's clear of any title defects back in time. So if there's any issues down the road, I will work with you to get them corrected, because I'm not aware of any defects on the property. That's the one we see the most often. The next one that gives some warranties is called a special warranty deed. This is used a lot more by builders or people that inherited a property, something like that. And that says that I warrant that I do own the property. I'm giving it to you. And I also warrant that there are no defects that were created on the title to the property during the period that I owned it. So I can't vouch before I owned it, but during the period I owned it, I'm clearing all defects and you'll be good going forward. And then the last one we see a lot is a quit claim deed. And this is basically stating, I don't warrant that I own the property. I don't warrant that it's clear of any defects, but if I do own it, I'm giving it to you. And if there's any defects with the title, it's on you to deal with it going forward. It's not my problem.
Yeah, that's the wrap up. Well, if people have legal questions or want to talk to you all about a closing, how do they get you?
Give us a call. Our phone number is 704-529-1100.
All right. Well, if you want to talk to us at Jameson, we're there. 846-DONE, 846-3663, or find us on the web at myjamesonhomes.com. We're glad to chat with you. We have property management for the investor, buyer, seller. Want to learn more about investment property? We'd love to help you. 846-3663. Enjoy your Saturday. Thankful for you. God bless. We'll talk to you next week. The show, Your Real Estate Today, here on News Talk 1110 99.3 WBT.